Hey, welcome back. In this midweek special, the on-chain financial stack gained real weight. BNY Mellon and Securitized launched a regulated credit fund on Ethereum. Deutsche Bank deployed a euro stablecoin across 6 blockchains. And Ondo Finance activated 100 tokenized equities via Chainlink's cross-chain interoperability protocol. Now, this isn't theory anymore. It's regulated capital moving on-chain. The migration has begun, so who's next? Goldman, HSBC, or a central bank? So touching on the first story around BNY Mellon and Securitized have launched a tokenized private credit fund on Ethereum, a SEC-registered, bank-backed and live on mainnet. BNY Mellon acts as a custodian, signaling deep institutional validation now for tokenized credit. This fund bridges traditional yield-bearing credit markets with blockchain native liquidity. It's a regulated deployment of real-world yield, not a pilot. Another proof point is that RWA credit is emerging as the next yield frontier beyond tokenized treasuries. Now, I have begun to introduce the topic of this tokenized credit on the blockchain because it all started when the likes of Ondo Finance, which is the current leader in the tokenized treasury space, where they've introduced government-issued bonds on the blockchain. That is what tokenized treasuries is all about. And it's actually this trend begun, I would say, in the last 6 months when it really has taken off. Now we are seeing the other side of the coin where institutions and high net worth individuals need to seek credit. Now, what better way to achieve that goal by tokenizing private credit on the blockchain in order to open up the accessibility of 24/7 coverage in the financial markets on the blockchain, right? So this is going to be what I would expect to be the first of many announcements in brand new tokenized fund credits on the blockchain. So we need to watch this space, and this is going to be picking up speed and momentum, particularly when we're talking about large institutions now getting involved in tokenizing, whether it's equities or even tokenized treasuries. Now, on top of that, tokenized private credit. This is what really matters because largely these banks are regulated, and that has to be taken seriously because that will give us, the consumers, the ultimate protection rights whenever things go wrong. If you were to invest in a non-regulated crypto exchange out there, because we have seen many sad stories like the FTX, they've committed fraud and have stolen a lot of crypto funds from their clients. Well, if we move away from that into a more of a regulated space whenever we make these tokenized investments, well, this will give more confidence, more transparency, and ultimately the consumer backdrop in terms of its protection rights whenever they want to withdraw what they've invested in these custodians, whether it's banks now or crypto exchange, particularly those that are regulated. Well, that is what we should be focused on more than anything else. So this is very good news. Now, this leads on to my next story around Ondo Finance integrated Chainlink data feeds to power over 100 tokenized equities on chain, expanding beyond treasuries into stocks, ETFs, and indeed other regulated assets. Now, Chainlink now serves as the pricing and compliance oracle for these assets, anchoring institutional-grade data integrity. With over $500 million of assets under management, Ondo leads the RWA tokenization and is now entering multi-asset territory. This positions Chainlink as core infrastructure for on-chain securities, no longer just limited to DeFi. Now, again, for me, together with Ondo and Chainlink, amongst one or two others that I'm seeing, Chainlink, for me, is going to be the top RWA vouched for coin project because it is acting as that Oracle data feeder into all of the RWA coin projects. Because as I explained in several occasions, the actual drawback of any blockchain system is its capacity to be able to suck in real-life data from the physical analog world where we live onto the blockchain, because that is not readily available, at least natively speaking, on the blockchain. So that is the huge gap that all blockchain systems have. They don't have real-life data, so it doesn't have any real-life value as a result. So the way to plug that gap is the likes of Chainlink. But by bringing the oracles on board and providing that data feeds into the RWA coin project, specifically the smart contracts on those blockchain systems. So it provides ultimately that value add to institutions, to governments, and to the rest of us retail investors. So this is, again, for me, has to be that top RWA coin project that you need to consider, because we are seeing, as I'm explaining in these midweek specials and in my Friday desk reviews, this is so important in terms of how it's becoming more interoperable within the TradeFi space. Now we are expanding the breadth of other DeFi projects. So this is very, very good news. And I would expect this to pick up significantly in the months and years ahead. And this leads to my last interesting RWA coin project that I've seen. So Deutsche Bank have launched their EURAU, which is a euro-backed stablecoin issued across 6 major blockchains: Ethereum, Solana, Avalanche, Polygon, XRP Ledger, and Base. They are fully compliant under the EU's MiCA regime. It marks the first multi-chain stablecoin from a global tier European bank. Now, this is live infrastructure, not a testnet demo, expanding euro-based liquidity for RWAs and indeed cross-border settlement. Now, this signals Europe's acceleration into regulated, interoperable digital money with real issuance from systemically important institutions. Now, again, I've made similar announcement of a Spanish leading bank, BBVA, that's announced that it's going to do something similar, issuing its own euro-backed stablecoin. Now, we're seeing yet again another announcement from Deutsche Bank, and the ripple effect has just begun, right? So the pebble has dropped onto the European ocean, right, particularly in the Mediterranean, where you're going to be seeing these large financial institutions in the Eurozone to do exactly what BBVA and now Deutsche Bank have just announced, right? So this is very good news, because as I explained again, I'd rather have stable coins, because that is truly decentralized and managed by both the central banks who issue the underlying fiat, but the stablecoin in terms of how it's issued is not issued by these central banks, but the commercial banks, right? So that is acceptable as a medium of exchange, not to be confused, mind you, as a store of value. For that, you need to look for harder assets. I would suggest Bitcoin and maybe one or two of these RWA coin projects that have reached a certain level of acceptance and adoption in TradeFi, along with its high TVL and a large number of news and announcements talking about the coin project. So in addition to that, the stable coins are only used to cover those online expenses. Whether we're talking about buying a theatre ticket or a flight ticket for the family, then you would need to use stable coins. It just doesn't make sense to relinquish any of your harder asset, digital asset tokens like Bitcoin for that, right? So it's different purposes. So this is very good news. And then I want to round off in this midweek special a couple of interesting announcements on Bitcoin, where we are seeing that France have proposed a national Bitcoin reserve where it wants to buy 2% of Bitcoin supply. Now that equates to 420,000 Bitcoin over the next 7 to 8 years to strengthen its financial sovereignty. Now, we've seen that if you add this France proposal and the US and a handful of other countries, in total there are 27 countries now holding Bitcoin in their national strategic reserves, with 13 nations proposing formal legislation to adopt Bitcoin as a sovereign asset. So what I'm trying to say here is there's no question now that Bitcoin serves as that long-term hedge, not as a medium of exchange, which is what stablecoins are for me, what plays that important pivotal role. Now the momentum gold rush to acquire Bitcoin is now unmistakably a reality and no longer hype or fluff. So I'm not going to dwell on what you need to do. I already explained that in several videos. I'm just putting on the facts and the news that I'm hearing out there and leave it up to your judgment as to how you should react and take that on board. So that's all I have for you for today. If you value clarity on Bitcoin, blockchain technology, and real world assets tokenization, stay alert. Subscribe and enable all notifications to stay ahead of the curve. Share this episode with those who need to understand what's coming, friends, family, and colleagues. This channel aims to deliver insight, no noise, and no hype. Subscribe now.